All right, let's discuss replacing cost value and actual cash value, because there's a lot of confusion out there, the difference between the two. Now, that's something that you want to, when you're shopping for insurance coverage, you discuss those details with your agent. A lot of people, you just go ahead and sign here, hey, this is what my premium is going to be, but without having those facts, those details, you're going to miss out on, in a storm, you're going to really be surprised and find out that you made a mistake. Now, let's describe replacing cost value, what that is. Well, replacing cost value, usually they do it in two steps, two checks. You're going to get a depreciated amount for your roof. Let's say your roof actually costs today's market $10,000 to replace. They're going to depreciate it based on how old your roof is. So it's fairly new. Let's say they hold back only $2,000 depreciation, so they have $8,000 actual cash value what they pay up front. So now there's the remaining $2,000. That is the depreciation. And I know that there's deductible portion in there, but for training's sake, we're just not going to talk about that right now. Let's just talk about the depreciation. So that $2,000 you'll recover once the work has been completed and the contractor has sent in a certificate of completion and a final invoice showing the total cost of what they allowed for that work. So ultimately, on replacing cost value, you get your whole roof paid for on today's market price value. So you don't have to pay out of pocket other than your deductible. Right now, actual cash value. That's the one where some people get surprised at the end just because of it'll have some benefits, but there's also some negative sides to that as well. Here's the benefit. For instance, you have a newer roof, an actual cash value, they're all going to pay the value of what it's worth. So they depreciate it, and you can't recover the depreciation. So in the instance that I used before in the replacing cost value, a newer roof, let's say they only took out $2,000 depreciation. On a $10,000 roof, they're only going to allow $8,000. The homeowner, you have to come up with the difference to pay for the remainder of the work. Now, the benefit to that is that your premium is probably going to be a lot lower. So you're going to save on your premium. You're just going to have to pay up front. And on a new roof is very little depreciation. It may be just a few $100s. But now let's speak on the negative side, and this is the one where usually people are surprised. Let's say you have a very old roof or wood shakes undiscontinued. If you have actual cash value coverage, is where it hurts you. Let's say you have the $10,000 roof again. Now, they may get depreciated down to they only paid $2,000 and you have $8,000 depreciation. That means that you have to come up with $8,000 to have that roof replaced. Now, again, your premium is going to be a lot less, but you're paying a lot out of your pocket to offset that cost. If you definitely need a new roof in the future, you may want to contact your agent and make sure that you have the right policy for you.